Focus Today. I'm your host, Perry Atkinson, and of course, all eyes and minds and thoughts and discussions on tariffs these days and what they are doing. And then that results into the overall economic condition, not only of the United States, but literally around the world. We heard just within hours the lifting of some tariffs actually causes the stock market to jump 1,000 points. Well, perfect timing, and always an honor to have with us. Professor Michael Busler's with us. He's a public policy analysis and professor of finance at Stockton University in New Jersey. He does have his own website. That's muckrack.com/Michael Busler. And there is a picture of that landing page, and it's a good way to communicate with him and stay in touch with all of his analysis. Professor, good to see you, friend. How are you?
I'm doing well, Perry. Thanks for having me. As you know, it's always my pleasure to be here.
Well, you're the man. When I grow up, I want to be like you. Someday I hope to pass your class.
You will.
All right. Well, where do we start with this? Did you ever think the use of tariffs would cause such an uproar globally?
Well, we've never seen the use of tariffs quite like this before. So once they were instituted, I did expect some turmoil. But let me start off by saying I'm a free market economist. I don't think there should be any tariffs on any products by any countries at any time. It really fouls up the whole system by putting on tariffs. Most governments and countries believe that there should be at least some tariff. So typically, a couple of percent, 2.5% was typically what some of the countries had. So here's the problem. Really, for the last 4 decades or so, there's been a very large imbalance of trade. In other words, we purchase far more from foreign countries, which means money flows out of the country, than they purchase from us, which means less money flowing into the country. So we have a huge negative balance of trade. This year, before Trump's actions, it would have been about $850 to $900 billion, and that's wealth flowing out of the country. So the first question is, why do we have this? Well, although the U.S. places fairly small tariffs on just about everything, every other country in the world places large tariffs. From China, they import automobile car parts. We charge a 2.5% tariff. Again, this was all before Trump. They charge a 25% tariff on some of our auto products, a 50% tariff. So we're not going to sell many cars in China. Even the European Union, we charge them a 2.5% tariff. They charge us a 10% tariff, and then have a value-added tax added on to that. The result of that is, how many Chevrolets and Fords do you see in Paris and Berlin? You don't see any. India, on motorcycles, they charge 100% tariff. So there's no way we're going to sell any of our products. So President Trump said, we need to fix this right away. And I don't want to convene a bipartisan committee and have debates for the next couple of months and town hall meetings and drag this on for a year. I want this fixed immediately. So what did President Trump do? He went to all the countries and said, listen, I want to renegotiate all these trade deals. Well, every country said, we're not in any hurry to do that. They're very favorable to us. So Trump is a business person. You have a reluctant trading partner. What you want to do is deal from a position of strength and create a sense of urgency. So President Trump said, I'm putting high tariffs on everyone. Now, some of these countries that depend on China included, depend on selling a lot of their output to the U.S. If we place these high tariffs, their countries would go into recession. So immediately, they all came to the bargaining table. It took about 5-6 weeks to get the first deal. First deal was with England. The goal is to have a 10% tariff on products they bring into our country, which again, I think is high, but President Trump views the tariffs as a source of revenue. So he wants more than just a small tariff. More importantly, England will now only place a 10% tariff on U.S. products sold there. This opens up the market to all of our manufacturers, especially the agriculture market, the beef industry. Well, now England will be opened to U.S. manufacturers that will increase our exports. Every deal that Trump will make, and again, we made a start of a deal with China, the same kind of thing. We're going to lower the tariffs, and we expect them to lower the tariffs even further, which they did. What's going to happen is within the next month or two, you'll see 20, 30, 40 countries striking deals with the U.S., which will open foreign markets to U.S. manufacturers. And these markets have been closed for decades. Even Canada. Canada says, well, we'll let you sell to Wisconsin. We'll let you sell some of your dairy products. But once you get up to a certain quota, we're going to place very high tariffs, 100% tariffs. So Wisconsin sold to them what they could, but they were limited. The goal is to get rid of all those quotas, to get rid of, with China, some of their currency manipulation. The idea is to have foreign markets open to U.S. manufacturers. That will encourage more growth in the U.S. Now, there's one exception, and every country is going to have an exception. The U.S. says there are products that are vital to national security: steel, aluminum, copper, medical supplies. Those products have to be made in the U.S. So I'm putting, why aren't they made now? Because it's cheaper to make it somewhere else and bring it in here. And our steel industry, our aluminum industry is essentially dying. So Trump now will place a 25% tariff on imported steel, aluminum, copper, medical supplies. That'll raise the price. So now it's cheaper to make it in the U.S. That manufacturing will come back to the U.S. Now, somebody will say back to me, well, okay, I understand that, but aren't consumers going to be paying more for those products? And the answer is yes. However, what Trump will do is he will vastly increase the supply of energy. That will bring energy prices down. Energy prices count for about 7% of the consumer price index directly and almost 30% indirectly, because it's cost to produce goods and things. They'll bring down the cost of energy, which he's already starting to do. So any inflationary impact from the tariffs will be more than offset by lower energy prices. And in the end, we'll end up with more manufacturing in the U.S. The inflation rate will come down. Just yesterday, they announced the inflation rate is down to 2.3%. That's the best it's been since February of 2021. And we'll have an economy that's set for growth. One last point. To keep the manufacturing down, you make something in China or Vietnam, they pay their workers $1 an hour. We pay our workers $25, $30 an hour. So how are we ever going to get the cost down? The answer is, when we bring the manufacturing back, it won't be a labor-intensive operation. In other words, it won't be an assembly line with a whole lot of people. It'll be a capital-intensive operation, which means we'll have robots, automation, artificial intelligence. And by doing that, they'll be able to keep the cost down. Somebody says to me, well, how do you know that's going to work? Do you have any examples of that? And I say, yes. Go into a fast food restaurant. I took my 2 grandkids into McDonald's last Saturday. They were anxious to go. They like the food and stuff. But when I went in there was a touch screen in front of me. I ordered the meal on a touch screen and I paid on the touch screen. Instead of McDonald's employing 8 to 10 people, they now only need 3 or 4 people with the capital. So McDonald's has reacted, and other fast food restaurants have reacted to higher minimum wages and labor shortages, driving up labor costs by replacing labor with capital. And that's what manufacturers in the U.S. are going to do to keep the manufacturing cost as low as possible.
Wow. No, that was great. That was an excellent explanation. Do you think most of your colleagues in the economic forecasting business see what you just said?
No. The vast majority disagree with me. I'm not sure if they're looking at things objectively. Some people just hear Trump and they automatically say it's no good. What they're saying is the inflationary impact of the tariffs will be much greater than what I believe. And therefore, they say, even Chairman Powell of the Federal Reserve said, I can't cut interest rates yet, even though the economy is slowing, because I'm afraid of the inflationary impact of the tariffs. But if you look at the numbers, it's not much of an inflationary impact. Why do I say that? Our economy is roughly $30 trillion. We import about $3 trillion. So even if the price of the imports go up by 10%, which they won't, all the tariff won't be passed on to consumers, some will, some won't. But even if it goes up that much, $300 billion, that only puts a 1% increase in inflation. Bringing energy prices down will more than offset that. And you'll end up with, as I said, low inflation, better growth, and a more secure America. I think as time goes on, and the economists see that, hey, this is really working, I think they may change their view.
Okay, so in the meantime, there's another thing that seems to be developing. President Trump sees that we need to not only bring a lot of manufacturing back, and key manufacturing, steel, aluminum, and other things like that. But when you look over at China, which is primarily an export state, okay, and you put tariffs on them, you just economically brought them to their knees. They have to come to the table, don't they?
Clobbered them. And I've been saying this since April 2nd when President Trump put this on. People said, well, China's never going to come to the table. China's economy before this was doing poorly. Why? They had a big real estate development boom. They wanted everybody to have good housing. It was all financed by debt. All of a sudden, it's okay to finance by debt, but keep in mind you have interest payments that you have to make. Well, once their economy slowed down, there wasn't enough income generated to make all those interest payments. Real estate prices in China have fallen about 30% since their peak, and their economy is slowing down. You add on to that, Trump put 140%, 45% tariff. Roughly 5% of China's output is imported into the U.S. Suddenly that all stopped. Now, China, they can't have that go on. People are getting laid off. Factories are getting shut down. So I knew China would come to the table at some point. It turned out it was a little quicker than even I thought. But they need us. Every country needs us more than we need them. And that puts us in a bargaining position of strength.
So one other quick 30,000-foot view. So if you look down on this from high up, the United States is probably the only country in the world that's capable of totally self-sustaining. Every other country is dependent on somebody else. Or am I misreading it?
No, the U.S., there's some things we'd have a little trouble with. Some of these rare earth minerals, although we signed a deal with Ukraine to try to get around that. But virtually everything else the U.S. needs to survive and maintain the standard of living, we can produce ourselves. Why don't we? Because it's cheaper to produce it somewhere else. Companies have been going there, producing it at a lower cost, then they can sell it at a lower price. And consumers said, I like that. I like the lower price. But if all of the imports went away, we'd still be able to sustain ourselves. And that's the most important thing, which puts us in a position of strength. Again, they need us more than we need them.
All right, let me take a quick break. Check out Professor Busler's website, muckrack.com/Michael Busler. There's where you can connect with him and take advantage of his analysis. We'll take a quick break. We'll be right back. Welcome back. Always an honor to have with us Professor Michael Busler. He's a public policy analysis, and he's a professor of finance there at Stockton University in New Jersey. He does have his own website where you can track his analysis, and that's muckrack.com/Michael Busler. And there's a picture of the landing page. You know, Professor, the president's been quick to go to a TV camera and a microphone to talk about people who are coming into the country and starting new businesses and bringing with it billions of dollars. We've seen quite a few announcements. Yesterday in Saudi Arabia, he gave the figure of 600 billion of exchange business, 142 billion of it in an arms deal with Saudi Arabia. Altogether, the president's claiming $8 trillion in new private sector commitments since returning to office. What does that mean to our economy?
It's very, very good news. So economies like to attract foreign investment. They have so much capital on their own, but if they can get more capital from foreign investments, especially in a capital-intensive economy, that allows much more growth. Apple's about to spend 500 billion. Those software companies are about to spend 500 billion. All of that coming in means more investment, more factories being built, more businesses being started, more jobs being created, and more economic growth for the economy, which in the end improves the standard of living for all Americans. We should welcome all of this foreign investment. And as companies get tied to you economically, they become more friendlier to you because you don't want to get in any kind of a conflict with somebody where you're tied to them economically. So all of this is very good and very positive, and we're already starting to see some results. We'll start adding to growth probably in the next month or two.
So as these companies move in, they're coming from other places. I mean, they're maybe most of them coming from China. They decided to set up shop, Apple being one of them. So when a company leaves a country like China and comes home and they set up shop, does China still have ownership of their intellectual property?
Well, that was part of the problem. They're not supposed to take our intellectual property in the first place, but the way their rules were set up, they essentially had access to that. Now, you can't take any of that away from them, and they don't follow our rules or even international rules that you can't use somebody else's intellectual property. So you can't take anything away from them, but going forward, no more. So we're not going to give you any more of our trade secrets and our property that helps you to do things. We're keeping it all for ourselves.
That seems to me would be a side incentive for a country, or excuse me, for a company now to come back home. I mean,
yes. Yeah. And Trump is also, depending on what happens with this tax bill that's going through, recall back in 2017, Trump lowered the corporate tax rate from roughly an average of 35% down to 21%. He's now saying, and again, I haven't seen what finally is going to get passed, but he's now saying any company that manufactures somewhere outside the country and brings manufacturing back, he's going to lower the tax rate to 15%. Okay. Again, that's more of an incentive. Trump wants an incentive economy. He wants people to work more overtime, so he's not going to tax overtime anymore. So he's looking to create incentives for people to do more and work harder.
Do you see the corporate rate coming down?
I don't think so in the short run. Now, I've been a big advocate of lowering corporate and personal tax rates down to 15%. I've been pushing a 15% single rate tax on all income for personal, on all income above a livable minimum with no deductions for anything. And I would also like to see a 15% corporate tax rate and a 15% rate on capital gains. In the long term, that would add a lot of growth. And I think we didn't end up, you might lose a little tax revenue in the beginning, but after a year or two, tax revenue would soar. So your question was, do I see it coming down to 15%? I don't see that coming anytime soon, but again, I think it's a great idea.
With the big deal recently announced out of the U.K., which is a foreign ally, do you see other countries, maybe Japan, South Korea, following suit? I mean, is there an incentive for them to get in line here?
There certainly is. And what the agreement with the UK, I think, set a roadmap for how all of these agreements will look. 10% reciprocal tariffs, we charge 10, you charge 10, applies to everything except certain special products. So each country will have something that they want to sort of carve out. We want to carve out The steel, aluminum, copper, medical supplies, we want that tariff to be higher. Other countries will have certain things that they want. But the basic framework is 10% reciprocal tariffs, no currency manipulation, which China does, and we're going to have to negotiate that. But I think other countries are going to follow the lead of Great Britain, and the countries you mentioned are on the verge of signing. Japan, South Korea, you mentioned India, but India is on the verge of signing. And when that happens, you'll see a flood of these things happening. That'll be very positive news for the stock market, and you'll see stock prices going up. Let me just add one point, if I can, about stock prices. Right after President Trump was elected, people asked me, what do you think about the stock market? And I said, if I was you, I'd put everything you can into the stock market. So they did that. And then in April, the stock market tanked. And they said, what did you tell me to do? I just lost 15% of value. What a horrible thing this is. And here's what I said to every one of them. Don't look at your portfolio until the summer. Don't look at it until the summer. By the summer, it'll be way up above what it was before Trump came into office. In the meantime, we're going to have these fluctuations. Every time something bad happens, the stock market crashes. Every time something good happens, it goes way up. So don't look at the day-to-day. Come back in a month or two. Take a look at the stock market. You'll be very happy.
Is President Trump, Professor, correct in criticizing Chairman Powell for not lowering the rates?
So in my view, Chairman Powell has been the worst Federal Reserve chair since Arthur Burns in the 70s. Why do I say that? He gets into office in 2018. Congress passes the tax cut. The economy should soar. For no reason, he raises interest rates 4 times. We ended up with 3% growth anyway, but it could have been much higher. 2019, he realized he made a mistake and lowered interest rates 4 times. The biggest mistake. From January 2021 to June of 2022, he kept interest rates near zero, kept the bond buying program going. Inflation went from 1.4 at the end of 2020 up to 9% in 2022. The Federal Reserve sat by and did nothing. Second major mistake. Third major mistake. Finally, in June 22, they start raising interest rates. They raised them till July of 2023. They should have raised them a couple more times. We'd have been rid of the inflation problem. Instead, he stops. Inflation goes down to 3%. His target is 2. Goes down to 3%. He stops raising interest rates. That allows inflation to linger. Finally, by September of 2024, the inflation rate is getting down under 2.5%. He didn't have to do anything, and the inflation would have gone down to the 2% we wanted. So what does he do? He cuts interest rates 3 times. Inflation goes back up to 2.9%, and now it's coming down. So your original question, do I think President Trump's criticism of Jerome Powell is valid? I think yes. Right now, GDP growth slowed in the fourth quarter of last year. It was negative in the first quarter of this year, mostly because people were buying imported goods. But still, it was negative, and the inflation rate has come down. Yesterday, they announced it's down to 2.3%. The Fed should begin cutting interest rates immediately to stop any further decline in growth and to try to spur the economy. There's no worry about inflation. Now, most economists don't agree with that. They say, well, tariffs are going to cause this and that. I don't think so. And I think Powell should start to gently drop interest rates over the next 4, 5, 6 months, go a quarter of a point 3 or 4 times. So I would agree with President Trump.
You had to look for it, but it was there, and that is that inflation's cooling. So
down to 2.3%. It's the lowest it's been since February 2021. The goal is 2%. We're just about there, but the economy is slowing. So gradually lower interest rates, stop worrying about inflation. We'll bring energy prices down. The effect of tariffs will be relatively small, and things will be much better if interest rates would start to come down. So I agree with President Trump.
Okay, I recommend you to be Fed chair. I'll put your name in. How's that? I wanted one other quick question, Professor. It was headlines for quite a while. And what's your take now on the overall supply chain of things?
So all of these tariffs will disrupt the supply chain. So I hear small business people saying, look, I get a lot of goods from China. What am I going to do? So I tell you what I say to them. You're an entrepreneur. You're supposed to be creative. You have to figure out how to source these products locally from American manufacturers. If it's not there, you have to help them to create it. So there'll be a couple of bumps in the road with supply chains, but give it 6, 8, 10 months, everything will be all smoothed out and will be much better positioned for long-term economic growth with low inflation.
All right, so for companies looking to buy products now that would be increased with a tariff, is your advice is to wait?
Yeah, I wouldn't panic. A lot of people are panicking, saying, well, I better buy this before the tariff goes way up. Whatever your normal buying patterns are, I would continue them. I wouldn't worry about the tariffs. Most of the tariff talk that President Trump does is for negotiation purposes. He doesn't want to see all these high tariffs on things, but he wants to create a sense of urgency because these people won't come to the bargaining table. Creates a sense of urgency. Everybody comes to the bargaining table, and before any disaster hits, everything seems to be worked out okay. So I wouldn't panic with anything. Just go about your normal buying habits, and everything will turn out to be fine.
Thanks for your time, friend. You always give it to us. Let me say to our viewers and listeners, Professor Busler has a website, muckrack.com/Michael Busler. There's a picture of the landing page where you can check in for his analysis there. Thank you, Professor, for your time. I'm learning a lot. Someday I'll pass.
Always my pleasure, Perry. Look forward to doing it again.
All right, see you later.